Welcome back to Investing Talk Podcast.
Good to be here.
Today we're focusing on Coeur mining, ticker CDE. We've got a bunch of information here, financials, news, industry analysis.
That's right.
And our job is really to distill what matters, help everyone understand what's happening with this precious metals company.
We've got data right up to April 4th, 2025. So pretty current.
Okay.
Includes their full year 2024 results, the recent Q4 2025 updates.
Right, the acquisition details too, Silvercrest Metals.
Yes, absolutely. We'll unpack the financials, their market position, and, the outlook based on all this stuff.
Okay, let's get into it then. The big picture first. Revenue.
Okay.
So 2024, they reported $1.1 billion. That's quite a notable jump from $821 million in 2023.
It is a big jump, and it seems to be part of a trend over the last few years.
What's driving that? Increased production? Metal prices?
Both, it looks like. Increased output, especially from Palmarejo, seems key. And they mentioned a 15% year-over-year increase in the gold price, they realized.
So strong operations meeting favorable markets.
Pretty much. The question is, can they keep that production up? And will prices stay helpful in 2025?
Good point. That sets a high bar.
It really does. Understanding those drivers is, crucial for figuring out their potential going forward.
Okay, let's pivot to profitability then. In 2024, GAAP net income from continuing operations, 0.15 cents per share.
Right. GAAP, the standard accounting rules, gives us that baseline view.
And $0.15 income is way better than the $1.30 loss per share they had in 2023.
A significant turnaround, no doubt.
Plus, their cash flow from operating activities, that also jumped substantially.
How much?
Went from $67 million in 2023 up to $174 million in 2024.
Wow, okay. That does suggest better operational efficiency, doesn't it? Generating more cash from the actual mining business.
It seems like 2024 was a real recovery year for them financially.
The numbers point that way. Moving from a loss to income plus that big boost in operating cash flow, it's a positive shift.
Here's where it gets maybe a little tricky.
Uh-oh.
The latest Q4 2025 earnings report came out February 19th. Paints a bit of a different picture. Revenue was $305.4 million.
Okay.
But that was below the forecast, which is around $323 million.
A miss. What about earnings?
Adjusted EPS for the quarter, $3.11. Also missed what analysts were expecting.
Not ideal. How did the market react?
Not well. The stock dropped pretty hard on April 4th, 2025, down about 11.48%, landing at $4.86.
Ouch. That shows you how sensitive the market is to these earnings misses, especially after a strong run.
So that positive momentum from 2024 seems to have hit a snag.
It certainly looks that way. It makes you wonder what caused the Q4 shortfall. Was it a one-off or is it something more systemic?
Let's dig into their financial health a bit more. Debt-to-equity ratio is around 43.2%.
Okay, so for every dollar of equity, about 43 cents of debt. Moderate leverage.
Seems moderate, yeah. Total long-term debt is roughly $577 million. Assets are about $2.22 billion.
All right.
But here's something to watch. Their current ratio is approximately 0.8.
Below 1. That means short-term assets don't quite cover short-term liabilities.
Correct. For every dollar they owe in the near term, they only have about 80 cents in easily accessible assets. Could suggest potential liquidity pressure.
That definitely warrants attention.
On the other hand, their gross margin is strong, around 60%.
So they're efficient at the actual mining and processing stage, getting the metal out?
Seems like it. But then the pre-tax profit margin is really low, only about 1.4%.
Wow, that's thin. So a lot gets eaten up after the gross profit. Operating costs, administrative stuff.
Apparently. High operational costs relative to the income being generated. It's a mixed bag when you look at the balance sheet and margins.
It really is. That 43% debt to equity isn't crazy high on its own, but paired with that sub-1 current ratio, yeah, you see the potential short-term challenge.
And the strong gross margin is good.
Definitely a positive. Shows control over direct production costs.
But that tiny pre-tax margin really highlights how much other expenses are impacting the bottom line. Efficiency beyond just digging ore seems crucial.
An area to watch closely for sure. Cost management.
Okay, let's talk about the business itself, the market context. Coeur positions itself as a key player in precious metals.
Primarily silver and gold, right? And focused geographically.
Yeah, North America, mostly U.S., Canada, Mexico. They say their diversified operations are a competitive advantage, helps manage risk and cost.
That makes sense. Spreading the risk.
And a huge development was finishing that Silvercrest transaction back in October 2024.
Right, where they issued all those shares. nearly 240 million of them.
What was the strategic thinking there? Just getting bigger.
Scale is part of it, but Silvercrest's Las Chispas mine is known for being high grade. The idea is that it could potentially lower Coeur's average cost per ounce of silver produced over time.
Ah, okay. So quality, not just quantity, positioning them as a top-tier global silver company.
That seems to be the goal. It looks like a cornerstone of their current strategy, a really pivotal move.
How's the overall precious metals industry doing?
Generally seeing growth. Demand for silver is up, particularly for industrial uses.
Like solar panels, electronics.
Exactly. And of course, investment demand is always a factor.
But there are always risks in mining, aren't there?
Oh, absolutely. Regulatory changes are a constant possibility. Environmental concerns can impact permitting and operations.
And the big one, commodity price volatility.
Always. Prices swing based on global economics, sentiment.
Yeah.
It's inherent to the sector. So favorable trends, but definite potential bumps in the road.
How does Coeur stack up against competitors, say Hecla Mining or Pan American Silver?
Interesting comparisons. Based on the info we have, Hecla seems maybe a bit stronger fundamentally, lower debt levels.
Okay.
Pan American, on the other hand, has shown better recent revenue growth.
Where does Coeur fit in terms of market share?
Moderate compared to Hecla and Pan American, who seem to have larger shares.
And you mentioned revenue growth. Coeur's has been declining recently.
That's what one source indicated, while Hecla's was stable and Pan American's was growing.
What about debt comparisons? We said Coeur's debt to equity was around 0.43 or 43%. Another source puts it at 0.53.
Right. Different calculations, perhaps, but in that ballpark. The point is, both Hecla and Pan American were reported with significantly lower ratios, closer to zero.
Meaning they rely much less on debt financing.
Correct. So comparatively, Coeur appears more leveraged. This competitive view gives important context. It highlights potential vulnerabilities.
Leading the company through all this, the operational stuff, the Silvercrest deal, is Mitchell Krebs.
Yes, CEO, president, and chairman. Seems like consistent leadership.
He was just at that BMO mining conference in late February 2025.
Right. Having stable leadership during big strategic shifts can be reassuring for investors. And these conference appearances are chances to communicate the vision, address concerns.
So looking ahead, what are the potential catalysts? What could move the needle for Coeur?
Well, the big new-term thing is their Q1 2025 earnings report.
It's scheduled for May 7th release. Call on May 8th.
That's it. That will be really crucial. Will it show they're getting back on track after the Q4 miss? Are recovery strategies working?
Everyone will be watching that. What else?
Ongoing exploration. They reported progress at the Silvertip project in 2024. Positive results from exploration could boost confidence, potentially add to their resource base.
So finding more valuable stuff in the ground is always good.
Always good for a mining company, yes. These could be key indicators for the near term.
But the risks we talked about haven't gone away.
Not at all. Commodity price swings are ever present, driven by global factors outside their control.
And regulatory changes in North America could always impact operations or costs.
Definitely. Plus, you noted analysts have sounded a bit cautious after the recent earnings miss. There's some uncertainty baked in.
So, summarizing. Based on everything we've looked at, it's a company that had strong revenue growth in 2024. Made a big strategic acquisition with Silvercrest, boosting their silver profile.
A key move.
But recent earnings disappointed. That led to stock volatility. And there are these questions around short-term liquidity, that current ratio, and operational efficiency, the thin pre-tax margin.
That sums it up well. The upcoming Q1 report becomes really important now. Are they turning things around? Addressing those concerns.
It really highlights the complexity, doesn't it? The interplay between financials, strategy, the wider market.
It does. And it really underlines why you need to look beyond just the headline annual numbers and watch the more recent trends.
Hopefully this breakdown gives folks a clearer picture of where Coeur Mining stands right now.
It's a snapshot of a company in transition, facing both opportunities and challenges. Staying updated is key.
What really stands out to you from all this? Or what other questions does it raise?
For me, I'd be keen to track the integration of Silvercrest more closely. How smoothly is that going? Are the expected synergies, like lower costs, starting to show up?
That makes sense. Follow the big acquisition.
And also, keeping an eye on silver demand trends, especially industrial demand, that's increasingly important for a company leaning more into silver.
Good points. For our listeners, if you found this insightful, please do subscribe, like, and comment. It genuinely helps us produce more of these focused analyses.
Absolutely.
And don't just take our word for it. You can dig deeper yourself. Check out Coeur Mining's investor relations page on their website. Look at their official statements, their SEC filings for the nitty-gritty details.
Comparing their upcoming earnings call transcript to past ones can also be revealing. See if the messaging or strategy is shifting.
Definitely.
And maybe one final thought to leave people with. Considering Coeur's bigger bet on silver now, think about this. How might shifts specifically in global industrial demand for silver, separate from investment demand, affect their future revenue and profits? That linkage seems more critical for them now than ever before.
Interesting angle. Something to mull over. Thanks for that.
My pleasure.